Hello viewers and welcome back to the Dukascopy TV studio. Dukascopy TV regular Jean-François Owczarczak is back with us today to talk through some of your favourite pairs. Jean-François, thank you very much for coming in today.
Thank you for having me back, Natalie.
Not at all. Now we're going to be taking a look at several USD crosses and we've got a few interesting drivers, but what's prominent for you today?
Well, I'll have a look at the euro, because the euro, we had a corrective target on the hourlies, which was around 136.20, and we had been pounding against it over the last few weeks. We finally went through. So is this an open door to much higher levels, or are we still in a strong resistance zone on the daily charts, and are we still going to see some work around here? So I just wanted to have a look at the euro, start with the euro. And let's click on an investor's view. So investor's view is basically our view of the markets for people that have an investment horizon in quarters to months to weeks. So what we feature here is a weekly chart, a daily chart, and an hourly chart. And you can see the summary box here actually shows how the trends interplay, and as the three trends are trending up, it's very simplistically potential continuation uptrend. You do get a bit more of an explanation when you click on the explanation here, and it doesn't add much when all three are in bull, but if you have bulls and bears together, you'll have a bit more of an explanation of where the trends are.
No, we've clearly got a pretty clear outlook on the euro dollar at the moment.
Well, I'm going to caveat that a bit. On the weekly chart, we're still moving out of what could be a double bottom, because we had one in 2010, we had one in 2012. We still at early stages. It's been enough to trigger our impulsive targets, but we're barely above what were our corrective targets. So although I'm positive here, I'm not tremendously aggressive at the moment. The good thing about FinGraphs is that it doesn't lie. It keeps you, there's no wishful thinking. And so at the moment it's saying three bulls. Well, you shouldn't be asking yourself too many questions. Now the levels are important, and if we look here and we're going to turn to the daily, well, we're still heading up. We had this setback here early November. Prices had come off of a strong exaggeration. The two envelopes had been touching each other mid-November, and the risk index was very much in the red. Now we have what we would call a resume uptrend, so we're moving up again, and the targets are pretty much in the 38.20 or 28 to the 140, 150 zone. So that's the potential over the next few months. However, we're slowly getting into stress already, and we also have an oscillator which is in the overbought zone. From a true technical perspective, I think a breakout above the previous highs, which I think are around the 138 to 20 to 30, is going to be the crucial point here. And until we get there, I think there's still going to be work to be done. And that is confirmed by the fact that it's slowly getting expensive on the envelopes, which are close to touching each other, and the risk index, which is very much in the overbought zone. Now, if you look at the hourlies seems to have still a week or so to go. They're also getting expensive. They are at stress. The two envelopes are touching each other, but it's probably a bit more strength to go here. So basically, probably the 138 mark is our short-term perspective. It would really have to move above that, and maybe the 138.20 or 30, which were the previous highs, to trigger anything bigger. So we'd remain prudent as calling this a major breakout at the moment. Now, if we go back to the mosaic, on the positive note, well, the sterling, the cable, which had been in a very good sync with euro dollar and was a leader, meaning more aggressive, is still heading up, has made new highs, and still has potential.
Has the potential to continue going up? Because we saw 27-month highs on Friday.
Well,
that's pretty significant in itself.
It's a similar situation with the euro. If you see here, we seem to be breaking out from a long-term consolidation here. The envelopes have turned bullish, but at the same time, well, you are at stress here. The oscillator is in the overbought. There's a bit more to go. and the hourlies seem pretty much done. So adds a bit more potential for the short term perhaps, but breaking higher in a significant manner is going to be important to really envisage anything else. I'm a bit of afraid that this is perhaps an intermediate top on both, and that you might see a setback behind these tops before you eventually move higher. Now, dollar Swiss, pretty much in the same situation as a euro dollar, but in reverse. I think the levels here are somewhere below the 0.89 level, so we really need to see a break of that. On the other hand, let's have a look at the dollar yen. Well, the correlation of the dollar pairs doesn't seem to be there anymore, at least with dollar yen. It does seem like Abenomics are having still a strong effect. But this is not too much of a surprise to us. If we click onto here, our weeklies had been in an uptrend for quite some point. We had toned that the top that we had earlier this year was probably intermediate, and that there was still some way to go. So slowly getting into an exaggeration here, so we might be see a short-term setback, but all in all, it seems like dollar yen is still heading up and yen is still weakening. Now, if we look at the three other items here, which are basically treasury bonds, gold, and Australian dollar, well, they've all been moving in sync. Basically, interest rates are coming up. It seems to be more a question of growth than inflation. That brings an opportunity cost in holding gold. Bit of growth is also, I mean, it's not a crisis environment at the moment, so gold has been going down also, and Australian dollar has followed suit. We're perhaps getting towards an exhaustion here, but as you see, the three trends are still quite well down, so it's a bit too early for me to call an intermediate bottom here, at least. And as for the markets, the 3-month treasury, well, expensive, and if you look at the investor's view here, still expensive on the weekly where we've reached the targets, expensive on the daily where we've reached the targets. They're both in the overbought zone, but at the moment when you have these two trends still moving up, it is still dangerous to call a top here, and we believe although it's expensive, we're probably entering a distribution zone. It's not quite finished yet, and we probably have some way to see until next year. And what was interesting is that we did have a consolidation last week. It was quite aggressive, at least on European markets. In the US, it never made it through our corrective targets, and it seems like it's already resuming the uptrend. So I remain prudently positive on the equity markets here at this stage.
Prudently positive. It's a nice note to end on. Jean-François, thank you very much.
Thank you.
Don't go away. The Dukascopy TV team will be back with all the latest in FX analysis, so we'll see you shortly. Goodbye for now.